What is up, everybody? How's everybody's weekend? Hopefully, everyone had a great weekend. Luckily, the ice storm wasn't as bad as what everyone was predicting and calling for, so that's a plus. I mean, we still got a little bit, but nothing too shabby at all. As you know, my name is Michael Weaver. I am a insurance and financial services professional. Teamed up with State Farm. I've owned my own business now for almost 3 years. Been with the company for almost 7. Graduated from Baker University with a business management degree, and recently received my retirement income certified professionals designation through the American College. So that just means that I specialize helping folks out in the retirement years, the distribution planning of retirement, that phase. So I just like to always introduce myself in case anyone's new. But tonight we're going to be talking about disability. So last week on Sunday Smarts, night 104, we talked about liability, protecting yourself from a liability aspect. So if something were to ever happen, someone sues you, you're protected financially. You're not going to have your wages garnished, things like that. If you do the things I talked about last week. Feel free to check me out. My YouTube is Michael Weaver Insurance. So every live feed I've done is now on YouTube. Pretty cool. Thank you to my wife for getting that done. She's awesome. But tonight, we're talking about protecting your income in the event. So that's all disability income is in the event that something happens to you and you can't work for 3 months, 6 months, a year, 5 years, how are you going to survive financially? It's a pretty important topic that I think a lot of folks miss out on or kind of forget about. Everyone knows they have short-term disability through work or maybe long-term disability through work. But I think sometimes people forget just how important those coverages are and why you may consider getting them from an outside insurance provider from myself. Just some crazy statistics to throw out there and why I'm covering this topic. So thank you to everyone that's joined so far. Hope you're having a great weekend. Go Chiefs. I think it's going to be an awesome game. But the statistics. So I don't know how many of you knew, but 75% of people in the United States right now live paycheck to paycheck. 75%. 3/4 of the nation lives paycheck to paycheck. 50% of people, so it used to be the last time I did research on this topic, I've been using 40%. Anyone that's ever watched my live Facebook feeds, I've said 40%. A new statistic came out. 50% of people in the United States have less than $400 in liquid money in the event that emergency happens. So an emergency happens, they have less than $400 accessible to them. That's 50%. 52 to be exact, 52%. But I just like to round, so 50% of people in the United States have less than $400 of liquid money available to them in the event of emergency. 30% have zero money put aside. No retirement, no savings, no emergency funds, nothing. So these statistics are the reason why I think it's important to talk about what we're going to talk about today. Like I said last time, my whole philosophy in doing these Facebook live feeds is to help knowledge, help educate, help answer questions, help you all take the proper steps to protect yourself. Because I want you saying, if in the event that anything ever happens, I want you saying, I am so glad Michael talked about that. I'm so glad I saw that, and I'm so glad I took his advice and I took care of that. I don't want you saying, if in the event that something happens, is, man, I really wish we would have taken Michael's advice and done that. That's what I don't want you saying. So this is exactly why I do this. I do this because if something ever happens to you guys, I would have a guilty conscience if I didn't talk to you about this. So I am able to say, I'm so glad I talked to them about that, instead of saying, wow, I wish that I would have talked about that. I wish that I would have done an episode about that. I wish I would have called them into the office and given them advice. So that is the whole reason I do Sunday Smarts. It's purely for you all. It's purely just to interact. This is the easiest way to honestly interact with you guys. Remember, check me out on the tube, Michael Weaver Insurance. So let's get down to business. Again, those statistics: 75% of people live paycheck to paycheck. 50% of people have less than $400 in liquid money available to them in case of emergency. 30% of people have $0 put aside. No retirement, no savings, nothing. And that is why we're talking about protecting yourself from the disability standpoint. So we're going to talk about disability income. So hopefully everyone understands the importance or the background behind disability income. So in the event something were to happen to you, you get hurt at work, you get hurt outside of work, you get cancer and can't work, that is when disability insurance kicks in. And typically, if you have it through work, your work policies are going to cover, I would say in most cases, 60 to 65% of your pay. Now, just remember, your work disability policies will then be counted as income. So realistically, you're probably clearing about 50% to 55% of what your normal pay was. Not only that, disability policies through work typically have a little bit longer elimination period. So let's just go ahead and talk about the ins and outs of a disability policy from a large, big picture standpoint. So a disability policy, you're going to have a benefit period. So a benefit period. What's up, guys? Mrs. Brittany, Mrs. Wanda, thank you guys very much. Hopefully you're having a great weekend, staying safe out there. Ray, I know, man, dislocated ankle. How about if it had been worse and you broke your leg and you couldn't work? It would have been crazy. So, benefit period. The benefit period of a disability policy is the point the disability starts paying out to the term of the disability. So let's say it's a 3-year benefit period. Well, for 3 years, 36 months, the company will pay you a disability check every single month. Benefit period. Next, you have an elimination period. An elimination period is the point in a disability policy that it has to wait to start paying you. So, for example, you get injured, you go to the doctor says, man, Justin, you broke your leg, you're going to have to get surgery, you're going to be laid up in bed for 5 months. At that point in time, you're going to let the disability company insurance policy know, hey, my doctor just wrote this, says I'm going to be laid up for 5 months. An elimination period. So typically, like our disability policies, I encourage either 30-day elimination period or 60. But 30-day elimination period just means that after the day your doctor says, or after the day of the injury, you can't work, you have to wait 30 days for the benefit to start kicking in. So in that example, you have a 30-day elimination period. On day 31, State Farm would mail you a check for your disability income for up to 3 years in that example. So does that make sense? So usually the income is about 60%, 65% of what your normal pay was. If you have it through work, it's taxed as income. It's counted as income. If you have it through an outside provider, like stacked on top of your work policy, which is acceptable and doable, there's no regulations against that. The policies through an outside provider like State Farm is not counted as income. Big deal. That's a big deal. So you have your benefit amount, which is the amount they're going to pay you. You have your benefit period, which is the time they're going to pay you for, and you have the elimination period, which is the time that you have to wait until the income starts coming in. Does all of that make sense? Brittany, I'm jealous. Where at in the desert are you? So, my question to you all is, if something happened to you, you got hurt, you got cancer, you got hurt outside of work, whatever it may be, and you couldn't work for 3 months, 6 months, a year, are you going to be okay financially? Like, are you going to be okay? Do you have enough money in reserves? And if that question is no, you need to add on to your disability. So I encourage everyone to have disability through work because it's so inexpensive. I also encourage everyone to have it through an outside provider as well because they can stack. Does the elimination period have a time not paid for? Yeah, so the elimination period is typically 30 days, 60 days, or 90 days. Through company policies, they can be longer. I've seen company policies have 6 month and 1 year elimination periods, which just means they don't start paying until you've been hurt for 6 months or a year. So you definitely want to check your policy with that. That's a great question. Great question, Wanda. So did you guys know 52% of foreclosures last year in the state of Missouri were due to short-term disability? So people not being able to go to work for 6 months, they couldn't pay their bills, the mortgage company foreclosed. So that's the whole reason why you in a lot of people, I think there's a state of mind that, man, additional insurance is expensive. It's crazy expensive. And that's just not the case. So, like our short-term disability policies through work, if you're really, even if you're older, but if you're younger than 40 years old, I mean, a lot of times to get the short-term disability, which is a benefit period of 3 years, our short-term disability policy through State Farm is a benefit period of 3 years, and it's a mortgage disability protector. So if you have a mortgage on your home, you tell us the amount you pay on your mortgage, and we give you the disability policy. For most people under 40 years old, it's less than $25-$30 a month to have. Like, very, very, very affordable. But just think about that peace of mind that you have, that you're protecting one of your biggest assets in your portfolio, your financial portfolio, by having a product that's $25-$30 a month, to where in the event that something happens to you, you can't work for, let's say you get cancer and you can't work for a year and a half. Well, you know you're going to have at least an amount coming into your household income that is going to be enough to pay the mortgage every single month. I don't know about you guys, but that's a huge peace of mind for me, knowing that I will always have a roof over my head. Like, that's a big, big deal. It's a big deal. Nice. I am jealous, Brittany. If your company doesn't offer disability, then you need to go get it from an outside provider. So there's tons of different companies out there. I mean, you've got State Farm, obviously. I think Aflac, probably. But the big thing is, when you go to an outside provider company, you want to go with a company that is financially stable, no like exclusions within their policies, see how in-depth their underwriting is, things of that nature. So State Farm is amazing. Our financial stability is awesome. That's a great question. Great question. If your company does offer it, I recommend always taking advantage of the policies through work and getting it from outside. So, any questions? Any questions at all? I know I just kind of flew through that, but it's important. So, if you ask yourself, if something happens to me tomorrow and I can't work for 6 months, are we going to be able to pay the bills? Are we going to be able to pay our house continue to pay our mortgage? Are we going to be able to continue to pay our vehicle loans? Are we going to be able to continue to buy food? And if you ask yourself this and the answer is no, you need to do something about that. Like, that's the responsible thing to do, is to take care of making sure your income is taken care of. If you get hurt in work, you get hurt outside of work, you get sick, God forbid, you get cancer and can't work for a couple of years, how nice would that extra $1,000 be coming into your household? I know that's not as much as you were making, but it's going to help keep your roof over your head. It's going to help put food on the table. It's going to make sure that your standard of living doesn't have to change drastically, which is what it's all about. So again, the reason I'm talking about this, statistically, 75% of people live paycheck to paycheck. If you live paycheck to paycheck, that's fine. However, if something happens to you and you get hurt and you can't work anymore, I mean, now you don't have enough money to pay the bills. You definitely need some type of disability insurance policy, okay? 50% of people have less than $400 accessible to them in the event of emergency. Again, if you're one of those people, you definitely need to look into this and fit this within your budget every single month. A short-term disability policy to where if you get hurt, you get sick, you're able to still pay your bills. I can't reiterate that enough. You want to be able to say in the event that something happens to you, I'm so glad I took Michael's advice and I got that inexpensive policy to protect my income, instead of saying, man, I really wish I would have listened to Michael and did that because now we're having to sell the house. Now we're having to sell the car. Man, my mortgage company just sent me a foreclosure letter. Like, those are the things you don't want to happen. And that is why I do this. So, but I think I've reiterated that quite a bit. So again, short-term disability, long-term disability is great. It's a little bit more expensive, but in the event that you get seriously injured and can never work again in your life, it pays you until age 67. So it's a great policy. But my main thing I wanted to talk to you today about was protecting your short term, so that you have enough income coming into the house for 2 to 3 years to figure out your financial situation and what changes you need to make. So does all of that make sense? Does anyone have questions? Any questions at all? Any questions at all? And again, this is part of the, I talked last week about you have like a triangle of protection. Your first night was talking about liability coverage, which is protecting yourself from lawsuits. So you get into a bad car accident, someone gets hurt on your property, making sure that you have enough liability insurance to protect you from lawsuits so people can't garnish your wages. That was night one. Go back, check out the video. It was good. I had a lot of positive responses, a lot of great questions. 2, this is episode 2. So protecting yourself from a disability standpoint, protecting your income. Like, that's one of the most important things you can do is protect your income. Without your income, you're broke. You're poor. Like, I don't know how how much scarier that can be. You get hurt, you get cancer and can't work. That's not your fault. But unfortunately, if you don't have any income coming into the household to pay your bills, there's going to be repercussions for that. And those are the things that aren't fun to think about. I totally understand that. Like, it's not fun to think about. It's not fun to talk about. But would you rather think about it and talk about it and just wipe that risk off of the table? Or would you rather chance it, never talk about it, never think about it, and then get hurt, and then lose your house, lose your cars? So, let's see. All right, we have a question. Mr. David West. So if you had to wait to draw disability for your coverage to kick in, what would a long-term policy be? Honestly, David, that's a great question. So long-term disability policies have the same elimination period a lot of times, so either 30 days, 60 days, or 90 days. So you could pick whether you wanted to wait 1 month, 2 months, or 3 months until that benefit started kicking in. That's a great, great question. But a lot of times I recommend people having a 30-day elimination period, especially for short-term disability policies. For longer term, to help keep the price down, you may look at a 60 or 90-day elimination period, as long as you have the funds to cover those first 90 days, if that makes sense. So that's a great question. And Elaine, thank you. I do like the hoodie as well. Any other questions? We've had some good ones today. So, again, talking about protecting income. It's one of the most important things you can do is protect your income. And the policies are so inexpensive. Like, I promise you, if you guys called me this week or wanted me to look up quotes for you, like if you instant message me and like, hey, Michael, can you look up and see how much it would be for me to protect my mortgage? I promise you, when I quote it and I give you a price, you're going to be like, oh my gosh, that's so inexpensive. Let's do that. Like, that makes total sense. Great question. So, accidental insurance, a lot of times, it could be short-term disability. A lot of times, accidental insurance is also things like we have an accidental insurance policy through State Farm as well. It's different than our disability, so it's actually like, okay, if you get hurt and you go to the emergency room, we pay you this amount. If you stay in the emergency room, or if you stay in the hospital for an extended amount of time, we pay this amount. If you have to have in-home care, we pay this amount. If you twist your ankle and just go to the doctor, we pay this amount. That's usually what accidental insurance policies are. They're for accidents, and they're like just payout per visit or per time that you're in the hospital. It's not necessarily a short-term disability policy in a lot of cases. Great question, Justin. Any other questions? Any other questions at all? Remember, shoot me a share if you got any benefit from this, or if you think anyone would benefit from watching this, what I just talked about. Please share it. Let your friends know this information is available. Please remember to subscribe. So every time I do the Sunday Smarts or we do our Weaver Wednesdays, you're notified that we're on. We appreciate you all. This is probably my favorite thing to even look forward to on Sundays is getting to do this and talk and interact with you all. Don't forget, check me out on the tube. So YouTube, Michael Weaver Insurance. Every Sunday Smarts I've ever done is not only on Facebook now, but also on YouTube. It may be easier to find on YouTube. So check it out, Michael Weaver Insurance. All right. Well, if there are no additional questions, I'm going to wrap this up because football's getting ready to come on, and I'm about to check out the Packers and Cowboys. So any other questions? Again, before I wrap up, I'm going to go over everything again. 75% of people live paycheck to paycheck. You definitely need an income protector policy. That's disability income. You need it. 50% of people have less than $400 liquid available to them in the event of emergency. You need to protect your income with disability insurance. 30% of people have nothing put aside. You definitely need to fit this type of thing into the budget to where in the event that you get hurt at work, you get hurt outside of work, illness, all of those things are not your fault, but if you can't work and pay the bills, there's nothing but bad things that happen after you can't pay the bills. So you can buy very inexpensive disability income policies to make sure your income's protected. That's the biggest thing I wanted to talk to you all today about, was protecting your income. I mean, you can call it disability insurance, you can call it whatever you want, but at the end of the day, it's an income replacement tool, where in the event that you can't work, you have an income still after 30 days. My favorite policy that I offer is... That's a great question, Noah. Every short-term disability policy is different. Some have 6-month payouts, some have 1-year payouts. Ours that I recommend folks get when I talk to them from a short-term standpoint is a 3-year benefit period. So it's enough to cover you. So the policy that I encourage a lot of folks to have is a mortgage disability income protector. So in the event that you become disabled or get sick and can't work anymore, State Farm cuts you a check for the amount of your mortgage, made out to you, not your mortgage company. So you can spend it for however you'd like, but you at least know you have an income coming in to pay your mortgage. It's a 3-year benefit period, which is awesome. So it gives you 3 years to figure things out financially. Hopefully you're not disabled for 3 years, but you never know. And that policy typically comes with a 30-day elimination period, which again just means that you don't start receiving the benefit until after 30 days. Yes, so Brittany, you just brought up an amazing point. So if you are a single mom, single dad, or better yet, if you are the only income stream that comes into the household, this is an even much more important product for you, because if something happens to you and you're the breadwinner of your household and you can't work, big deal, like huge deal. Like you need to protect your income, so you need to fit this into your budget. Um, that's a great point, Brittany. Like that is a great point. That I do have conversations with customers about, but I didn't even bring it up on tonight. So that's a great point. If you are the only income, or if you are a majority of the income that comes into your household, and you don't have any type of disability insurance or income protection, you need to look into it. You really do. Um, Again, you're going to be saying, if in the event that something happens, you're going to be saying, I'm glad I did that. I'm glad I took Michael's advice, instead of saying, oh my gosh, I wish I would have done something because I don't know what I'm going to do now. So, hopefully this was good. Hopefully you guys got something from this. Even after the live feed, after this is over, feel free to communicate, ask questions, interact. This stays on my Facebook and notifies me, and I will definitely comment back. I appreciate all of you. Hopefully you had a great weekend. Go Chiefs. And make sure you tune in next Sunday, 7 o'clock. I know today was weird with the Chiefs game. Excuse me. But next Sunday, 7 o'clock, we should be back at normal time. And I'm going to be talking term life insurance. So next week, so today we talked about disability. So protecting your income stream in the event you become disabled. Next week, we talk about life insurance. So that is protecting your income in the event that you pass away, your spouse still has an income stream coming into the household. So next week will be term insurance. The week after that will be permanent insurance. So we'll be talking life insurance for 2 weeks, because that's a pretty important topic. 2 different types of insurance. Any other questions? Any other questions? Thank you guys. I appreciate you all. Again, don't wait to contact anyone. I don't care if you contact me. Contact your current financial services professional that you use. But contact somebody and get quotes. Talk to your work. Talk to your HR department. Make sure that you have short-term, long-term disability through work. It's very inexpensive. Talk to someone like myself that can help you out. I promise you, if in the event that something happens, you'll be very happy and saying, I'm glad I took care of it, because now my family's not going to lose their house. My family's not going to have to move school districts. My family still has the car. My credit's not getting ruined. So those are all things that disability income protect. They protect you. They protect your income. They protect your credit. They make sure that your lifestyle doesn't have to change. All right, guys. I am going to go ahead and get off here. So thank you guys very much. Have a wonderful Sunday evening. Go Chiefs. And more important of all, make it a great week. See you guys.